Thank you for joining the FY16 HMEP application webinar for states and territories. I'm Lisa O'Donnell, the Chief of Grants and Registration. Today you will be hearing from Matthew Jones, our Senior Grants Management Specialist, Shakira Mack, our Senior Program Analyst, and Andre White and Carla Shepard, two of your Programmatic Grants Management Specialists. We'll be talking to you about a number of changes we're implementing this year, including a 3-year grant cycle, a new formula, and changes made as a result of the Fixing America's Surface Transportation Act. We have over 50 slides, so we anticipate that the presentation will last about an hour. Thanks for joining us, and now I'll hand you over to Matthew Jones.
Thank you very much, Lisa, and good afternoon to all of our current grantees and future applicants. We definitely have a full agenda today, so let's get to it. Today we're going to be talking about some important changes to the HMEP grant. 3 big changes. We've got the FAST Act, the 3-year grant cycle, and the updated formula, which we'll discuss towards the end of the presentation. We're also going to go over some of the components of the HMEP application, as well as some guidance on the application sections. We'll also dedicate a few slides to some common mistakes that we've seen in the past, as well as some strategies to address those mistakes for a better FY16 grant process. If your question is a little more detailed or it requires some additional time, we encourage you to send an email through the HMEP mailbox, and we'll have that link towards the end, to schedule a session to address any of the questions that you have about any of these changes moving forward for FY16. So the HazMat Grant Program Office, this is our staff. Of course, we have Erin Mitchell, our director, Lisa, who you heard from, Lisa O'Donnell, our chief of grants and registration. I'm Matthew Jones. Shakira Mack will be speaking later. She's our senior program analyst. Angel Henriquez is our administrative assistant. Lisa Reichenbacher and Suzette Edwards are your financial specialists. And Carla Shepard, Andre White, and Bonita Brown are your Programmatic specialists, and you'll be hearing from some of them later today as well. So briefly, just to keep in mind the regulations, the statute, and policies that kind of guide the HMEP grant program. First off, of course, you have the statute, 49 U.S.C. 5116. You also have 49 CFR 110, which is pending an update that we're streamlining some of the provisions. Of course, you'll have the funding announcement that will be coming February 1st, 2016. We hope to have that published. You've got your NFPA standard 472. Of course, 2 CFR Part 200, the Uniform Grants Regulations, as well as your OSHA HazMat requirements at 29 CFR 1910. So briefly, the FAST Act. So how did that affect the HMEP grant program? Well, there's 2 major changes to the HMEP grant program. First off, it combines planning and training grants into one grant. So under 49 U.S.C. 5116, it's combined under Part A, planning and training grants rolled into one. The FAST Act also removes that 75% pass-through requirement for the training and planning. So that provision is no longer applicable, but we will discuss what replaces that programmatically. 2 other requirements from the FAST Act. It added a requirement that recipient agrees to have an audible accounting system, so it includes that accountability. And it also includes a requirement that the secretary consider the past record of the state or Indian tribe in effectively managing, planning, and training grants. So the other big change, of course, is the 3-year grant award. For the 3-year grant award, starting in FY16, it'll be a 3-year period of performance, and that will be September 30th, 2016 through September 30th, 2019. The out-year funding, which is the year 2 and year 3 funding, will be provided via amended NGAs. So your grant number will remain the same throughout the period of performance, but you will receive amended NGAs that includes that new funding for year 2 and year 3. And that out-year funding, that year 2 and year 3 funding will be predetermined. You will have that information up front. It will only change if there's any sequestration action or if grantees do not meet basic levels of progress. And we'll talk about that a little bit further here. It will be outlined in the funding announcement as well as the terms and conditions of your award that will go out later in the year near September. So let's talk about the pre-award phase for the 3-year grant cycle that is coming up. Your funding allocation emails will be sent next week in late January. The funding announcement should be posted on February 1st, 2016. And applications will be due on May 2nd, 2016. So this, of course, provides you all of February, March, and April. So around 90 days for a well-written application. This is much longer than we've previously given applicants. So in part, it's to deal with a lot of the changes that we've implemented this year, as well as to improve the quality of applications that we receive. And for the 3-year grant cycle, applications that come in on May 2nd must reflect the 3-year period performance. Now, your year 1 project narrative must have detailed activities, timeline, a budget narrative, and goals. So year 1 has to be detailed, just as it has been in the past. Now, years 2 and 3 may have targets identified in the project and budget narrative, but does not necessarily have to have that full level of detail as year 1. So the 3-year cycle award phase. In FY16, we'll issue the grants in September of 2016, which runs consistent with the cycle that we've been on in the past for getting awards out. The period of performance will be September 30th, 2016 through September 30th, 2019. The NGA will identify the funding targets for the out years, that is year 2 and year 3 in the remarks section. And the terms and conditions of your NGA will provide the requirements for the continuing application, which is what you'll be submitting in year 2 and year 3. Now, those terms and conditions will give you information such as where you're going to submit that continuing application for year 2, what the format will be, etc. So the continuing application, what is it exactly? Well, your continuing application, that is the application that you're going to submit in year 2 and year 3, it'll simply be a compressed version of the annual application in response to the funding announcement. So the sections of the continuing application will be any updates to contact information, the project narrative, a detailed project narrative for the upcoming year. It'll have that 424A budget for the upcoming year, budget narrative for the upcoming year, or it may be a statement that nothing has changed from the original approved application if you are one of those applicants that has planned ahead and essentially planned out their entire 3 years ahead of time. We'll also be asking for a detailed timeline for the upcoming year in the continuing application. So for your continuing application in year 2 and year 3, you will not be required to provide certification forms, governor's letters, any statements required by statute, etc. This is done, of course, in year 1, this year, FY16, what you're submitting on May 2nd. And that will remain valid for the entire project period. So in summary, the continuing application should be much shorter in year 2 and year 3 than it will be this year, which should be a welcome relief to us all. So post-award for the 3-year cycle. Now your year 2 continuing application will be due June 30th, 2017. And in the grantees will update that application and request approval of any activities that were not defined in the initial application. You're going to need that detailed budget for year 2, and updated targets for year 3 may be included. It also provides an opportunity for our staff at PHMSA to question any activities or lack of progress during the review of those continuing applications. So the year 2 award will be made via an amendment in Grant Solutions. You'll have the same grant number and the same period performance, but with an infusion of the additional funding. Any unspent year 1 funds will be automatically carried over into year 2. Now for year 3, those continuing applications will be due June 30th, 2018. Any grantees with unspent funds or a complete lack of progress from year 1 may receive an offset in the year 3 amount, and that offset will correspond by the amount not spent from year 1. Grantees may request supplemental funding in year 3, and that will, of course, be taken from the offset pool from those grantees that are struggling to meet their performance goals and haven't spent any funds from year 1. And in year 3, PHMSA staff will review any supplemental funding requests competitively, and that will be based on merit and factors that will be outlined in your funding announcement, as well as the terms and conditions of the award. And those will include a needs assessment, grantee performance, risk level, spending patterns, timely reporting, etc. Any unspent funds from year 2 will be carried over to year 3 unless there is that aforementioned lack of progress identified. So, closing out the 3-year grant cycle, the period performance will end on September 30th, 2019, and the final reports will be due December 31st, 2019. There will be no extensions for the 3-year period performance grant because we're giving 90 days to generate the application and 3 years for the period performance. There will be no extensions. And once we close out this 3-year grant cycle, is on to the next 3-year grant, which will be September 30th, 2019 through September 30th, 2022. Now, just some considerations for the 3-year grant cycle and some of the changes we've discussed here. So applicants could have the entire 3-year activities detailed in that first-year application that's coming in on May 2nd. Continuing applications would then simply be an update or a statement that nothing has changed. So if you want to plan ahead based upon your organization's policies, if you can do so, feel free to plan ahead for year 2 and year 3 as well. We also encourage you to start early. I mean, we are giving 90 days, and this should enable you to identify those subawards prior to application submission. Additionally, you already know the year 2 and year 3 funding, so that's an additional incentive to plan early and make sure you submit a complete application. And one final consideration, because we're moving to a 3-year period performance, we need to see steady progress throughout the grant period. Waiting until the final year, year 3, to start catching up and completing activities is completely unacceptable. And due to our new format, that may result in a loss of funding for year 3. So please, plan ahead and steady progress throughout the period of performance. So the 3-year grant cycle timeline. In FY16, January 30th, we're going to get those allocation emails sent to you, and that will be inclusive of the updated formula that we're going to discuss later in this presentation. February 1st, you will see the funding announcement posted, and we'll also send out an email blast once that's done. On May 2nd, that's your deadline for applications. May through July, our staff here at PHMSA will be reviewing the applications. And in September 2016, we will be issuing those NGAs with that period performance from September 30th, 2016 through 2019. And in FY17, your reports, your biannual FFR and performance reports will be due April 30th. Deadline for the year 2 continuing application is June 30th. August 30th, we'll complete our year 2 reviews here at PHMSA. And by September 30th, we send out the funding for year 2. So application due date, just to summarize when applications are due, May 2nd, of course, this application, the competitive application for year 1 is due. June 30th, 2017, year 2 is due. June 30th, 2018, year 3, and May 2nd, 2019, the competitive application is due for the next 3-year segment. And these slides are just for you for planning purposes. If you ever have a question about when applications are due, you're welcome to reference these slides for planning internally. They'll also be included in the terms, conditions, and the funding announcement that you're going to see published shortly. So now that we've gone over some of the changes, I'm going to hand it over to Andre White, our program specialist, and he's going to be talking about the pre-application requirement, and that's going to include the needs assessment.
Thank you, Matthew. This portion of the presentation will be talking about the pre-application requirements, as Matthew mentioned, more specifically the needs assessment. So the needs assessment, or the pre-planning phase of the application period, usually sets the tone for the actual application and the performance year. So when you're conducting a needs assessment, you want to basically make sure when you're performing this is to make sure when you do it, the needs assessment is a clear and well-supported statement that identifies and addresses instances where your needs as a program are not being met. You can identify those needs using a simple equation here, which I've identified on the presentation slide. That is the desired program minus the actual program, which will equate to your program need. when performing the needs assessment, be sure to remember it's important to differentiate between needs and wants for your program. You want to prioritize as such when conducting these needs assessments. You want to make sure that you take care of your program needs before your program wants or desires. It's important to make sure that your program is taken care of with regard to your training and planning needs, and then you can lower prioritize your wants as a contingency. So a couple things to consider when performing your needs assessment. You want to allow sufficient time to actually perform the needs assessment. You want to involve the necessary parties to make sure that the needs assessment is accurate. You want to determine if those needs, when you found out those needs, are feasible. You want to determine if those needs coincide with the goals for your agency. And lastly, as I mentioned before, you want to prioritize those needs according to level of importance. I've included an example of a needs assessment for those of you who are wondering what a needs assessment would look like according to the PHMSA standard. I'm using a fictional state here, state of Closeout, and we're assessing also fictitious counties, Tula County, Smithville, Jones, and Somerton. The objective in this needs assessment is to determine emergency preparedness needs for the listed counties in an effort to obtain funding from the Pipeline and Hazardous Materials Safety Administration's HMEP grant. This is a preparedness assessment, so it reads, Tula County is Closeout's largest county. The county has 5 chemical facilities that produce nearly 2/3 of the United States ethanol. 3 of 5 chemical facilities are located in the heart of the city, with 2 remaining located in rural areas. ChemX Industries own all 5 chemical facilities. Tula County's Local Emergency Response Commission has worked closely with ChemX Industries to develop emergency response plans in case of an on-site or in-transit chemical emergency. However, these plans only cover 3 facilities located in the city. The 2 remaining facilities need to have emergency response plans developed in order to ensure the entire county is prepared in the event of a chemical accident or incident. So as you can see here, we've stated several needs for Tula County and the state of Closeout. So we're going to go on to evaluate those needs here in the next slide. So the next step in the performing the needs assessment is to perform a gap analysis. We're going to use the equation that I talked about previously, desired program minus actual program equals program need. So let's look at our actual standing here. We currently have 5 chemical facilities. The example gave us that we have 3 emergency preparedness plans in place covering 3 facilities. The desired program is to have 5 chemical or emergency preparedness plans covering all 5 facilities. So using the equation, we now have our program need, which is to develop 2 emergency preparedness plans covering the remaining chemical facilities. That was basically a brief example of what a needs assessment looks like. Please keep in mind when doing your needs assessment that the level of effort that you put into your needs assessment will determine how strong your application is. So I definitely urge you guys to put a lot of effort in conducting your pre-planning phase. And if you need any help or any further examples of what a needs assessment should look like, please send us an email or place a call to our help desk, and we will definitely help you and assist you going further. I would like to now turn over this portion of the presentation to Carla Shepard, who will be discussing the components of the HMEP grant application.
Thank you, Andre. We'll go right into the components of the HMEP grant application. There are 3 components to the HMEP grant application. One is the standard forms, which includes the SF-424, the SF-424A, the SF-424B, and the assurances. The second component is the project narrative. It is consisting of the organization information, which key contacts, needs assessments, goals and objectives, proposed activities to include the projected output and outcome of each, performance period, timeline, and monitoring. The third component is the budget narrative, in which Matthew will speak to that shortly. It describes and explains the costs listed in the SF 424A and demonstrates how match will be met. Right now, we're going to focus on guidance and reminders for the standard forms that are required. SF 424, we ask that you please fill it out correctly. Make sure you have the correct authorized official and contact information listed. The SF 424 period of performance must show 9/30/2016 to 9/30/2019. Please remember, as you're doing this, that we are now doing a 3-year performance period. Also, another tip is if it has an asterisk, it needs to be filled out. The SF 424A, which is comprised of budget information. Section A, enter the year 1 federal and match amounts in their respective columns. Section B, do not separate planning and training when you're doing this section, which are the object class categories. And FY16 and beyond, these are combined. Enter the federal cost only in this section. Please do not do a combination of federal and match. We only want to see the federal. It will get pushed back. Match is to be explained in the budget narrative only. Section E is where you will enter the forecasted amounts. You will enter year 1, year 2, and year 3 amounts in their respective columns. You also need to make sure when you're reading the funding announcements that you find, locate, and pull out the attached insurances, which are the lobbying form, the Title VI forms, and please sign those and also send those back with the submission of the application. Next, we're going to talk about the project narrative. The project narrative review the FY HMEP funding announcement for that, please, to make sure that you have all the proper information. The funding announcement will clearly explain the outline of the elements that are required. When you are writing the project, make sure that you complete these in the order that is shown on the funding announcement. This is something that we ask so that when we're reviewing all of them and they look alike, so we do not have to delay going back and forth in the applications. Also, please do not copy and paste your project narrative from last year. The requirements in FY16 are different this year. We are looking for way more detail this year. The project narrative must fully describe the proposed activities. Sub-grant process to be determined is no longer acceptable with application submission. If we do see that in the application, we will stop reviewing at that time and return it back to you and ask for detailed information. Applications that cannot describe how funds will be spent will not be awarded in FY16. So please be sure you have a full 90 days that you gather that information as best as you can and submit it in your application. Next are the project activities. There are a few things that you need to remember when you're listing your project activities. We need to see the who, what, why, where, when, how many, and how much. The who being who will perform the task or the activity. The what being what task or activity is being performed. The why is why are you performing this task or activity. The where is where will that task or activity take place. The when is when do you project that activity or task being performed. The how many is how many participants will be involved in this task or activity. The how much is what is the projected cost of the task or activity. All this information needs to be in the project activities that you list. Once again, you do not have it, we will stop and send it back. Here we have an example, and we're going to continue with our made-up state and counties of proposed activities the correct way. Tula County, a sub-applicant of Closeout is proposing to conduct a HazMat refresher course as a number of responders are now due for training. Training will be conducted at Tula Hazardous Materials College in Tula County. Tula County is projecting to conduct a HazMat refresher course during the third quarter of the first year for maximum participation. 57 participants are projected to attend the training. The projected cost for this training, which will include travel, supply, facility rental, and registration costs, is $27,571. This example here shows you all the information and answers to all the questions that was on the previous slide to what we are looking for. Next, outputs and objectives. An output is the specific measurable activity that will take place in the grant project. For example, updating 2 plans in the county, training 10 responders at the technician level. An objective is an overachieving principle that guides the decision-making for the organization. When including your outputs and objectives in the grant application, ensure that they are SMART. SMART standing for specific, measurable, achievable, realistic, and timely. The timeline. The timeline provides a benchmark upon which grantees can monitor themselves for their progress as well as monitoring from PHMSA. Project narratives must have timeline that indicates when activities will take place. And when we say when, we're looking for proposed dates. We understand that life happens and things change, but we do need to see a proposed date on that. Next, we will have Matthew Jones to speak upon application budgets.
Thank you very much, Carla. Okay, we're going to talk briefly about the application budget, which is your SF 424A. So a grant application must include a budget, and that budget must detail the costs required during the performance of the project. Of course, the purpose of that 424A line item budget and budget narrative provides a forecast of expenditures, and it enables the actual operation financially of the organization to be measured against what is forecast. So the budget request is reviewed for compliance by our staff here at PHMSA, and we follow the governing cost principles and any other requirements, including statutory requirements and program requirements applicable to the HMEP grant program. The cost principles address the 4 classic tests that PHMSA follows in determining cost eligibility. And of course, all of your costs must be allowable, allocable, necessary, and reasonable, and consistently applied. So the budget provides an overview of costs. That's your 424A line item budget. The budget narrative, on the other hand, is written to give a fuller explanation of the costs and how they were calculated. So the budget narrative of a grant proposal, it's very important, and it provides transparency for the proposed costs listed in the budget. It provides the justification for those proposed costs that may appear questionable to PHMSA as the granting agency. And it also provides those details on how and where the applicant will satisfy the statutory cost-sharing requirements, which is your match. So we spoke earlier about how there's no longer the 75% pass-through requirements that existed in the program previously, before FY16. And so while there is no 75% pass-through requirement in FY16, there remains a 75% programmatic requirement. That means that at least 75% of the funds must be for programmatic activities. Now, these programmatic activities will include, the statutory purpose of the grant. Outlined in your funding announcement, they'll include developing, improving, and implement emergency plans, conducting commodity flow studies, conducting exercises, or training public sector employees, of course. So if 75% of federal costs have to be for programmatic activities, the remaining 25% may be used for management and administration costs, known as M&A, associated with the HMEP grant. So the 25% M&A costs may be used for the management of the grant, could be used for monitoring sub-grantees, or for any administrative costs associated with the grant. Some examples of what you'd use your 25% M&A allowance on include personnel and fringe costs for state employees who are involved with oversight and monitoring of the grant. Could be used for travel and supply costs associated with monitoring the grant, or for indirect costs. And we should emphasize that it's not required that you use a 25% for M&A. It is only required that you use 75% for the programmatic. If a grantee wanted to use 100% for programmatic, that would be fine. There's no requirement for that, but you do have to adhere to the 75% programmatic requirement, and that will be outlined in your funding announcement as well. So briefly, we're going to go through the object class categories that you'll be putting together for your line item budget and give you some guidance on how to fill that out in the budget narrative. So personnel. Personnel are employees, employee salaries for those working directly on the HMEP grant project. In your budget narrative, we'll need you to include the number and type of personnel, the percentage of time they're dedicated to the project, the hourly wage or salary, and the total cost. It's important to note that this category should be limited to only those persons employed by your organization. Any contractual or consultant costs should not be listed in personnel line item. Instead, you're going to want to put those costs under contractual. Fringe benefits. Fringe costs are those allowances and services that are provided to employees as compensation in addition to those salaries and wages. So for the fringe section of the budget narrative, please include how the benefit was calculated, as well as a description of specific benefits charged and the benefit percentage. It's important to note for fringe and personnel that they must be separated into their respective line item categories. Please do not combine these costs together as one lump sum for individuals, because we will need to push that back for clarification. Travel costs. So travel is the costs requested for field work that may be associated with monitoring the grant, or for travel to professional meetings associated with the HMEP grant. In your budget narrative section for travel, provide the purpose, the method of travel, and number of persons traveling for each trip. You're also going to put the number of days and estimated cost for each trip that you're requesting for your grant application. Now, if the details of the trip are not known at the time of application submission, then we'll still need you to provide at least a basis for determining the amount requested. So we need to know the methodology for why you're requesting the amounts you are for travel. What is not acceptable is just putting a large lump sum in travel, leaving us to decide whether or not that's reasonable. Please separate it out into trips and put an estimate for each trip. Equipment. So in the budget narrative, equipment includes those items which are tangible, non-expendable personal property that have a useful life of more than 1 year and an acquisition cost of $5,000 or more per unit. And that is unless the state or territory threshold is lower. For equipment, we'll need you to provide a description, a quantity, and unit price for all equipment. So if the expense is under the usual threshold of $5,000 per item, most likely it will belong under the supplies line item category. However, the one exception is if your equipment threshold is below $5,000, please provide an explanation and also include the state policy citation to back that up. Your supplies line item in the budget narrative. Supplies are the tangible property other than equipment, and we'll need you to include the type of supply item in general terms. So it's not necessary for applicants to document office supplies in great detail. For example, we don't need to know the cost per ream of paper, boxes of paper clips, etc. But one good way to document supplies is to indicate approximate expenditure of the unit as a whole. The one exception to that is applicants should include a quantity and unit cost for those larger supply items such as computers, printers, laptops, tablets, etc. For the contractual line item in the budget narrative, Contractual costs are those services carried out by an individual or organization other than the applicant, and that takes the form of a procurement relationship. Now, there are really two ways to capture costs in the category. They can either be subgrants or contracts. So what is a subgrant? And it's defined at 2 CFR 292 and 2 CFR 200-330, which gives additional requirements for subgrants. Subgrant is an award provided by a pass-through entity, which is the state or territory, to a subrecipient to carry out part of a federal award received by that state or territory. And there's two really key criteria for determining whether or not a relationship is a subgrant versus a contract. First off, if it has its performance measured in relation to whether the objectives of the federal program were met. And second, do they have responsibility for programmatic decision-making? And really the programmatic decision-making is probably the best criteria for determining whether or not this is a subgrant relationship. Now, on the other hand, what is a contract? Well, contract is a legal instrument by which the prime grantee recipient, which is the state or territory, purchases property or services needed to carry out the project or program under an award. Sub-awards and contracts must be listed in the contractual line item category. In the budget narrative, you should correctly identify whether it is a sub-award or a contract based upon the criteria we just discussed. And also, I will mention that 2 CFR 200-330 gives a fuller description to help you determine whether or not a procurement relationship is a sub-award or a contract. And I encourage you to take a look at that to give you some additional guidance for making that decision. So the other line item category, now other costs, other direct costs, well, those are the costs that don't fit any of the other categories. Now, this may include rent for buildings used to conduct project activities. It may include printing costs, utilities, and leased equipment. It may also include employee training or tuition or any other supplies that don't fit other categories. For other costs, you're going to want to itemize those and provide the methodology for how you arrived at those cost estimates. And indirect costs, of course, those are incurred for common or joint objectives that benefit more than one project. So applicants for the HMEP grant program must include a current and fully executed agreement in the application if you're claiming indirect costs. Please make sure that the rate, the indirect cost rate, is applied to the appropriate base listed in the approved agreement. And if the rate is not going to be approved by the application due date, please attach a letter of renewal or letter of request that was sent to your cognizant agency. So of course, if you're requesting indirect costs, make sure you attach that rate with your application, please. So matching. Of course, that is the portion of the project costs that are not paid by federal funds. For our planning and training grants with HMEP, of course, this is 20%. Now, as Carla alluded to earlier, please, on the 424A budget, enter match in Section A only in its respective category. Do not, and I repeat, please do not include in Section B where the line item categories are listed. Section B should be for federal funds only. And in FY16, if match is listed in Section B, the application will be returned to the applicant for revisions. Last year we did give this same guidance, and I think we had some flexibility and we allowed it to come in with match and federal costs. But this year we're definitely going to have to push back on that. So Section B, federal costs only. Please make a note of that. And match must be fully described in the budget narrative. So if it's not in the Section B, the budget narrative is where you fully describe how you're going to meet your match. And it should be clearly marked in the budget narrative, a separate section, underline match or cost share, and then explain how you're going to meet it. And that explanation should be in the same manner as you would explain federal costs. So, some overall budget narrative guidance. Submitting a well-written budget narrative will result in a much faster review by our staff here at PHMSA, and it will lower the administrative burden on our HMEP applicants significantly. I encourage you to please check for computational errors in your budget and budget narrative. There are several of these in FY15, which results in days or weeks of correspondence back and forth that could be avoided if they're checked for before submission of the application. And lastly, one key criteria is every number that you have listed in your SF 424A line item budget should have a corresponding explanation as to how it was calculated in the budget narrative. So one of the tips that I encourage all of our applicants to utilize this application period in the next 90 days, once that funding announcement is posted, is before you submit the application to us, go through your line item categories in the 424A and make sure they correspond exactly to what you've explained in the budget narrative. Just taking a few hours at the end to make sure that everything lines up and addressing any mistakes that may take place will save days and weeks of correspondence back and forth when we have to return that application and narrative for correction. So please, I really encourage you, and we're hopeful that FY16 will be a turning point for the applications that we come in that will receive much higher quality budgets and budget narratives. So I'm going to turn it back over to Carla Shepard. She's going to briefly talk about some common mistakes that we see routinely in the application and some strategies to maybe cut those mistakes off so that we can have a smoother application process.
Hello to everybody again. I'm just going to jump right in. A common mistake deals with the agency or state goals and objectives identified. We find a lot that they are misaligned. Objectives enables unallowed expenses. So ensure that your objectives are aligned with your activities and expenses. Also, lack of clear outputs and outcomes for the activities. Make sure a very good way to lower that is, as I was speaking, the components of the application, we went through the questions. Ensuring that all of those questions are asked clearly defines your outputs and outcomes. So, just by giving all the information needed for project activities, you can clearly inform us of outputs and outcomes. The SF 424A, the budget substantiated in the narrative. Matthew just hit on that. I will just reiterate. Some common mistakes is undisclosed activities, which enable unallowable activities. Just make sure that whatever you put into the 424A, as Matthew has said, when you go to the narrative, it needs to be detailed. It needs to be able to clearly explain those costs that you show in the 424A. Also, another good way to clearly define this and not have unallowable costs is to list all your projects and give all the details associated with the projects. And that also cuts down on the discrepancy between the 424A and the narrative. Another thing is lack of curriculum descriptions compliant with the regulatory standards and or NFPA 472. Make sure that the projects and the courses that you list are compliant with regulatory standards, or at least the NFPA 472. Anything outside of that, we're going to push back on you unless you provide enough detail that we can clearly see that there is a link and it is tied to HazMat transportation related. The next one is matching details. Lack of clarification or detailed explanation of how the agency will make its 20% matching contribution, resulting in rushed and incorrect accounting. So once again, I'm just reiterating what Matthew just spoke to you about. On your budget narrative, you need to clearly explain how you plan on meeting that 20% match. Example, just saying in kind is not. What activities and how in kind are you? Are you meeting the in kind match by donations, by students' time? And if you're doing that, you're also going to need to explain or show clearly that there is a set rate for those students if you are using the students' time as a matching. Other mistakes are found in object class category incorrectly used. Incorrect categorization enables mishandling of expenses or may cause post-award audit triggers. Matthew, I'm just reiterating what he said. Make sure when you do your object class categories that you are listing the correct expenditures under the correct category. If it is a state employee for that agency that holds our grant, you need to list their time under personnel. If you are using a contractor, you need to list that expenditure under contract and explain it under contract object class categories. CERC and LEPC involvement is another common mistake. This is usually, we find, lack of a statement detailing the appropriate CERC involvement. We usually get CERC and LEPC work together. That's really not telling us. We need to know how the CERC is involved in it with our grant. We need to know how they're working with the LEPCs with the funds with our grant. So if you could provide more detailed information, that would be greatly appreciated. Another one is personnel cost incorrectly charged to the program. We usually find undisclosed activities enables unallowable activities. So when you do this, make sure if you list the project, if you're listing it, make sure if that person who's doing the project is not the agency employee, we do not want to see them under personnel because they are either a sub or they're either a contractor. Their costs should not be found in personnel costs. When you do this and we look at it against the budget narrative and they don't match, we're going to stop and we're going to send it back to you and we're going to ask for clarification, and then we're going to turn around and ask you to redo that portion of it. So, you guys have 90 full days to do this. There is no rush's time. We're giving you a full 90 days. So just make sure. And if you have any questions and you're not sure whether you're doing it right, that's what we're here for. At the end, you'll have our contact information. So please, if you're not sure, we prefer you to contact us on this just to make sure that you get it right the first time and that we don't have to do any delays on your application. Another common mistake under indirect costs, we find this a lot, missing indirect cost agreement. And usually this is you have put it in your budget narrative. You have also put it on your 424A. You have put the expense down. However, there is nothing in there so that we can justify that you have a valid federal indirect cost agreement. And this, once again, like I said, it delays, it stops us. We're shooting it back out to you and asking you for this information. Another one is overlap between indirect and direct cost. By this, we mean if you have an indirect cost agreement, and you have listed it in your application, and you have provided the agreement, and we're reading the agreement, and that agreement incurs personnel on your indirect costs, but you want to put that personnel in direct costs, then there's a problem. You cannot choose to use indirect costs and direct costs when you want to when submitting an indirect cost agreement. If you want to use all those costs direct, then please do not submit and let us know anything about indirect costs. You don't have that choice to do one or the other. Your indirect cost agreement is what we're going to look at for indirect costs, and that's how we're going to monitor and make sure that there is no overlap between indirect cost and direct cost. So please be aware of your indirect cost agreement when filling out our application. Another one is incorrect agency authorized representatives, otherwise the AOR, on the application. One of the things we find is listing the wrong name as the authorized organization representative. Most of y'all know we had this problem when it was time for the NGAs. A lot of the NGAs went to the person that we had on the application on the 424, and it resulted in having to pull that back, having to get that person into our system, and then rerouting it to the correct person. That's one of the things we spoke about earlier, is please filling out that 424 properly. Under the section authorized representative, please put the name of the person who is authorized to sign the NGAs for our grant. And that way, you know, we cut out the delays or the pullbacks or the oops that we had a lot of problems on for FY15. Another one we find is to accept the NGA, the correct ARR name and email address must be provided on the application. If the AOR changes between the application submission and before the NGA is released, please contact your grant programmatic specialist to let us know so we can get that information updated and get that new person in the system so that they can receive the NGA when it goes out. We understand changes always take place, but we just ask that you please, as soon as you know and have that person's name, contact us so that we can make the changes promptly. Now I will turn it over to Shakira Mack, and she will talk about the new HMEP formula.
Thank you, Carla. Good afternoon, everyone. I'm going to briefly share some information with you all about the new formula that we will roll out for fiscal year 16. A few facts about the new formula. It is risk-based. It includes new sources, and it's only applicable to the states. Now, just for reference, we have the old formula sources that we use since the inception of the program, which included the census data, highway miles, the truck inventory use survey, and SARA 302 and Tier 2 facilities data. When we went to initially assess the formula before updating, we looked at our original sources, and we found that many of these sources could not even be updated because they had expired. So that brought about the need to identify new sources for the formula. So as you can see on the right column, we have our new sources. Incident frequency, this is the data that PHMSA collects. As you all know, we do a lot more than grants here, so we have an entire division that collects incident data every single day. One of the neat things about incorporating the incident data into our formula is that we also get to incorporate additional modes of transport, and that includes rail, water, air, and highway. As you can see from the left side, previously the only mode of transport that was included was highway miles. And just like in the past, we are going to continue using the U.S. Census data for population. A little bit more on the new formula. What we've done is we've taken the average of 3 years of the PHMSA incident data. And that incident data, just to know, it includes serious incidents and non-serious incidents. And then it takes into account the cost of those incidents by mode. We've maintained a base. It's 20%, so we've increased the base a little bit more. And that helps a lot of the smaller states maintain some type of workable allocation to conduct planning and training activities. We also made the programmatic decision to add in a $1.5 million cap, and this means that no grantee can get more than $1.5 million, regardless of the risk-based formula that we have now. When we originally looked at the pure risk-based formula and the initial allocations, we had at least one state that went well over $2 million. And what that did was that significantly lowered the amount available to award to a lot of our smaller states. So this was a programmatic decision that was made to ensure that all of our grantees receive a workable allocation where you can at least do some planning and training activities to meet your needs. As I originally mentioned, this is only applicable to the states. The reason why that is because the incident data that we collect and a lot of the other data sources that we will be using, they do not collect data in the territories, unfortunately. To include the territories would have been ideal, but it was just impossible. So what we were going to do as a program is we're going to look further into what kind of data is out there for the territories, and hopefully within the next few years we can find a good risk-based model for the territories. The tribes, we're going to keep them at a competitive application model, and this is because we're never aware of how many tribes will be applying. And we will have a special tribal webinar tomorrow. If you're interested in that and you don't have information on that webinar, please contact our HMEP inbox or give us a call, and we can make sure that you can participate in that webinar as well. This year, we do have a sequester still. Our sequester rate is at 6.8%. Last year was at 7.3%, so it has gone down just a little bit, but we still do have that sequester, and you'll get your allocations by the end of the month. If you have any questions about this formula, I'll be happy to help as best as I can and answer those questions at the conclusion of the webinar.